Good afternoon, everybody. We're back for our PPP webinar today. We're going to go through all the new changes that came out in the last couple of days from SBA and from the federal government. We'll talk about changes just to PPP today. We'll stay away from SBA loans, EIDL grants, and the ERC, but we will schedule further webinars just to concentrate on those because you really need to make that the emphasis. So today is PPP. Hopefully all the rules have been written. We'll hang in there for a couple of minutes until everybody joins, and then we'll get started at about 12:05 or so. Hope everybody's enjoying.
If the sound is bad or there's any other issue, just let us know in the chat and we'll try to figure it out.
Please let us know that the sound is good so that we'll make sure the sound is good because we had some sound issues. Tom not doing it. So is it good? Okay. Yeah, he takes it out of pocket or something.
Did you say that?
Out of pocket.
We lost a teammate.
I thought he was out of pocket because he might have lost money or something.
Oh, no, that's right.
My phone. Where is it? What? Oh. One. Oh, they're probably on the call. One.
He might be on the call. Anyway.
Yeah, Mark is probably on the call.
Tell them how we just almost got into a fight.
Yeah, Kristen and I are fighting, so.
And I was wrong for the first time.
Well, I'm not going to confirm that she was wrong. I'm just going to confirm that we disagree.
No, I don't disagree anymore.
And hopefully we have, we'll get some more clarity. Where are we number-wise? See if we get up like one.
It doesn't know that I'm from Pennsylvania.
Then it's Kenzo.
I am a Kenzo. For real. All right.
Let's see how many people we have on.
131.
Okay. Is anybody joining?
Yeah.
Still going up?
Did a little bit.
Like somebody put over there 3 or more. Maybe they made a comment.
Sound is good.
A little muffled. Sound is good. Sound is garbled. That's not good. So we'll try to ungarble, but continue to let us know if there's a sound issue. And we'll speak loud and we'll speak slowly. And if you can't hear us or understand us, please stick it in the chat and we'll try to make a change here if we can. Let's give it another minute or so. So we'll go through a little bit of the history of PPP. One of the things that's going to happen now is that there's an opportunity to go back and fix your first loan if it needs fixing. There's also some streamlined forgiveness issues we want to talk about. And the second loan will start, the availability of funds will start on the 18th from what we understand, which is next Monday. We have heard that from a couple of our banking friends. So you should be ready, get ready for Monday. We are told by the SBA and by the banks that the government will not run out of money in this plan, so that if you're not first in line, it doesn't mean you won't get funded. There's 2 already. Sure. Okay. All right, we're going to get started. So welcome everybody to our PPP webinar. My name is Bob Simpson, and I am a partner at Brinker Simpson & Company. With me is Kristen McCabe, who heads up our COVID-19 response team. That's been on it since March the 15th of last year, if you can believe it's been that long. We're rounding out our 10th month, I guess, or our 11th month. Holy cows, hard to believe. And it's certainly from March 15th until January the 12th, things have changed somewhat, and we are changing along with it. We have a few things. Today we're going to do the PPP loan only. That's what we're discussing today. And we want to make sure everybody is very comfortable with forgiveness, taxation, and round 2 of PPP. There will be limited there'll be a limited number of clients or businesses that can get round two. So if you don't fall into the categories that we talk about, then you really are one and done with PPP 1. So people have said there's PPP 3 coming along. That will be sometime between April and June, and we have heard that as well. But over the last couple of weeks, we've heard a lot of things coming from the government. We're trying not to listen to any of them right now. But let's concentrate on what we do know and what we have. We are Brinker Simpson and Company is a regional CPA firm located outside of Philadelphia. For those who aren't in the area, we have a team of 50 people here specialized in tax work, audit, and financial statement work, outsourced accounting. We do fraud and forensic investigations, litigation support, and we have a valuation team. We've been in business for 32 years now. And our client base is typically anybody that's an emerging business with zero revenue up to companies that do $100 million in revenue and more. And our sweet spots are typically in the $4 to $40 million revenue, privately held companies, no public companies, helping our clients do everything from balancing a checkbook to getting PPP loans and navigating through all the COVID necessity. We do have restaurants and gym clients that did close for good this past year, and we have restaurant and gym clients, we'll say, and salons and places like that that survived. We actually have a couple of restaurants whose income has increased during 2020 versus 2019 because of some of their creativity. And very early on in our webinar series, we did discuss being creative as business owners because that's what it would take to get through this. And we have some great success stories as well as some horrible stories to tell. The disclaimer is in there. We are not giving advice today. We are simply sharing information. And we do recommend that you contact your CPAs, accounting professionals, and bankers and make sure you go over the program with them because your circumstances certainly aren't the same as everybody else's. Some house cleaning, just use the Q&A to ask questions. Our typical MO is we talk for about 20 minutes to 30 minutes and then we'll answer all of the questions that are in the Q&A before we go off the air. We try to keep it to an hour. If we have a lot of questions, obviously we're going to go over the hour, and we ask you to hang in there as long as you can to hear all the answers. Hold back on asking questions just yet until we go through our presentation. Typically, a lot of those questions we'll answer as we go. We'll share the slides after the presentation's over, and we do record these presentations, and they are on our YouTube channel, so you can go back and get them at any time. So you're aware is that we are our agenda is on the screen now. That there were changes in the PPP program as soon as yesterday. We've tried to incorporate those changes into our program today. You will, as you've been a veteran of all of this, you realize every time a change comes out, 10 more questions get asked. So some of the changes that come out that we're going to present today, we really don't know what the applicability of all of them will be because there will be clarifications on them that will be needed by SBA and by the Treasury Department. But we will tell you what we think those changes mean for people. And some of them are very significant, especially for people who are able to get the second loan. So that's our list. We do have the new applications that were produced over the weekend, so we'll share those applications for you at the end of the presentation. So the act that came out at the end of 2020 was called the Consolidated Appropriations Act, CAA. We'll use CAA acronym as we go. It includes reestablishing a second set of PPP loans for qualified individuals who meet certain criteria. It also set very clearly that the PPP money that you got that is forgiven or is forgivable is not taxable in any way. If you are not paying the loan back, do not include it in your taxable income and do not reduce expenses by the loan amount for your tax return. It is not taxable. We can't be any clearer than that. And yet we still are talking to people who are deducting it from their, or adding it to their P&Ls before they get to their tax return. It is a loan that is being forgiven that is not taxable. Never heard of it before, but let's not ask questions. Let's not argue about it. Let's take the gift that they gave us. If you have it on your balance sheet as a loan, and you're going to be forgiven, or you are forgiven. I don't know any clients that have been I do know one client that got forgiven. But if you are going to be forgiven because you meet all the criteria for forgiveness, it would behoove you to get that off your balance sheet and put it into your capital balances or your stockholder equity accounts and share it with the owners of your company. It does build up their basis for losses if you need basis to cover losses. So make sure you discuss that with your accountants and make sure you get your stock basis built up. That was a change that came out. Originally, it was not going to, originally it wasn't going to be there was going to be tax. So it would have definitely added to your basis. So if you're in a situation where your company got the PPP money and it's sitting in the bank, or equivalent money is sitting in the bank, and you want to make that withdrawal to get it out of your company, you can do that without any taxation at all, assuming you have basis in that withdrawal. So it's very important. Basis is very important. The EIDL advance was changed in this program, where forgiveness was reduced by the amount of the EIDL grant that you received. That was up to $10,000. Originally, you could only be forgiven for your loan net of that grant. Now that grant comes out of the computation. So you can be forgiven 100% of your PPP loan, even if you receive the EIDL grant. There's a new streamlined forgiveness process for any loans that are $150,000 and below. It used to be for any loans $50,000 and below. But now if your original PPP loan was $150,000 and below, there is a 2-page forgiveness application that has to be sent in without any documentation to support the forgiveness computation.
That's not available yet.
The form is not available, just so you know that. There was the $50,000 form that was available, but if you're at the $150,000 level, you have to wait until SBA and the banks issue that form. So do not be applying for forgiveness yet. There's no disadvantage to sitting back and waiting until all of this gets flushed out. You have to make sure one thing we'll cover is that you did spend the first PPP loan in full before you can go and get the second loan.
And you may be required to submit documents to the lender, just not the SBA. It might be an attestation they may ask.
So the lender may ask for documentation. The SBA is not asking for that. So the program opened yesterday for community banking customers. We're going to concentrate more on the commercial banking customers other than community banks, and for minority borrowers. So if you are a certified veteran business, or a minority owned business and you have a certification, or if you're a certified woman owned business, then you can start your process for round 2 this week. And right, exactly. Everybody else starts next Monday. So be ready.
We hope.
Yeah, we think. We talked to some bankers today, and they're asking us when it starts, so that's not a good sign. The streamlined forgiveness is a 1-page application. All forgiveness requirements apply. You have to spend all your money. 60% of it has to be on payroll. You can't lower your head count. You can't lower employees' wages by 25%. So you have to attest that you followed all the rules of the PPP loan when you put your forgiveness application in, and you should be automatically forgiven if you're under 150. You can pick any period between 8 and 24 weeks to get to the forgiveness period. You can use the 2019 or 2020 payroll to calculate the loan amount. Seasonal employers have a new measurement period to determine how much they're eligible for if you're a seasonal employer. And you also can go back on your first PPP loan if for any reason there was a short in that loan, and you can increase that loan if the new terms of the second PPP loan could increase your loan amount in the first loan. You can go back and reapply for that increased amount And one of the questions we came up with was, what if I made an error in my first loan application and I'm due more money? Can I go back and get that extra money? And it is not spelled out that that's one of the criteria for going back in and getting more, but I think you should talk to your banker immediately and without question put the application in to get the amount that you were shorted. You'll never know the answer until you apply. So if you were short for any reason, or if you or if the new criteria for the loan could increase the amount that you would be eligible for, please go back in and get that done. Get that done quickly, because you have to show that you spent all of the first loan before you can get a second loan. Let's talk about the first draws. The CAA expanded the eligibility for some previously excluded organizations and expanded the types of eligible non-payroll costs. Borrowers can apply for the first loan until March the 31st of this year, or until that funding from round one is exhausted. So if you recall, there was still money available at the end of the two tranches of the first PPP loan. If you recall, I believe it was about 325 billion came out in March, and then another 300 billion came out in June. So there were two applications that went in. You can read where the first draw covers payroll costs. Funds can be used to pay mortgage interest, rents, utilities, worker protection costs. These are all changes now that came through. Related to COVID, uninsured property damage costs caused by looting or vandalism, and certain supplier costs and expenses for operations. So the certain supplier costs we'll get into. Do we go into that later?
I don't.
So we just want to go through that definition a little bit, and we found a couple of experts in here. And one of the supplier costs are materials that are necessary for you to do business at the time you made the application for the loan and at the time that you ordered the materials. So if you're a restaurant business and you're buying food in order to sell to your customers, our belief is that food costs are supply costs and would be covered by the PPP loan, both loans, first and second. That's part of the 40% non-payroll costs that you could include. So if you recall, we always said rent was an includable cost until we found out later that if you had a self-rental where you rented your building back to your company, the rent amount that you could claim for forgiveness was only the amount of mortgage interest that you paid on that building. So if you didn't have a mortgage on that building, you couldn't claim any of the rent. Well, now they throw this supplies cost in there, which could help people who need another cost for forgiveness beyond payroll and the other costs. So this is a very significant cost. In addition to that, you're going to have accounting and computer costs that are used to run the financial end of your business. Looks like they can also be included in that cost structure if you need that cost structure. Now, when they extended the 8 weeks to 24 weeks, many of our clients, including ourselves, were able to get 100% forgiveness based on payroll. Because if you recall, you really only did payroll based on 10 weeks for your loan application, and your forgiveness can be based on 24 weeks. So we were able to get 100% forgiveness on our loan. We haven't applied yet, but we will get 100% based on payroll. We don't need any of those extra costs, but be aware that there are new costs available. Let's talk about eligibility for the first draw. There were businesses that had 500 employees or fewer and would otherwise be eligible for SBA 7A loans. Certain businesses are ineligible for those loans. If you're a medical marijuana grower, you are not eligible for any of these loans. If you run a gentleman's club or any entertainment like that, you are ineligible for these loans. So there is a moral turpitude test we'll put to this in order for you to qualify for the loans. That hasn't changed. Even in the second round, those types of businesses are still not eligible.
Permanently closed. be better.
Yeah, and permanently closed businesses. So if you were in business but you closed for good, you're not eligible for round 2. It does include sole proprietors, independent contractors, and self-employed, not-for-profits, veteran organizations, including churches. There was an extension for the not-for-profit list that included 501c6 organizations. That includes chambers of commerce and organizations like that that were excluded from the first round. Now, they can go back in and use that criteria to get a loan based on the first round of funding. They may not qualify for the second loan because you'll see there's an income qualification, but they can go in and get round 1. So anybody who didn't apply for round 1 that would qualify under these standards can go in and get round 1 money as long as it's available. First round reapplication and loan increase. So we're telling people to reapply the first draw loan if they previously returned some or all of their first draw loan funds, or under certain circumstances, request to modify their first draw loan if they previously did not accept the full amount for which they were eligible. So if you gave back money on the first round and you qualify for keeping that money and having it forgiven, you can go back and get it. And if you did not accept the full amount of the loan, which we did have some clients accepted a lower amount, you can go back in and accept the full amount of the loan, and it will be forgiven and it will be tax-free. Confirm with your lender how this impacts the timing on the second loan. You just have to be careful that if you qualify for the second loan, that you can get it in time. All right, let's talk about the second draws that are coming up. Second draws are limited to eligible borrowers. What is the eligibility? You'll see that the definition of what expenses can be covered is similar to what we just talked about. The eligibility, you received the first PPP loan and you have used the amount in full, only for the authorized expenses. So you spend all your money. You have less than 300, you have not more than 300 employees. So you can have exactly 300. And you need to demonstrate, this is the tricky part, a reduction of 25% of gross receipts between comparable quarters in 2019 and 2020. They must be calendar quarters. So go measure your gross receipts, and we'll talk about what that means in a minute. Go measure your gross receipts for the 4 quarters of 2019 and for the 4 quarters of 2020. Compare them each quarter by quarter, and if any one of those quarters in 2020 is below the 2019 amount by 25% or more, you do qualify for the second loan, regardless of how your year turns out, regardless of your profitability, regardless if you made 1,000% increase in the other quarters. If you have one quarter that's down by 25%, you qualify. That's it. So go back and do that measurement now if you haven't done so already. The maximum loan amount, how you determine the loan is you take 2.5 times your average monthly payroll cost for 2019, 2020, up to $2 million. That's the maximum amount of the second round of the loan. For anybody who's in the NAC code 72, has an opportunity to take 3.5 times average monthly payroll cost, still up to $2 million. The code 72 is for restaurants, hotels, entertainment venues. So if you're in that, any code that starts with a 72, and check that out, you could get 3.5 times. So you really are getting 140% of the first loan based on the same criteria. What's that? Gross receipts. So this is a little tricky part, and we're not going to try to make it too difficult for people, but the government's making it difficult for us. All right, receipts should follow how they reported on their tax return. Now we're going to argue about that because
I think I was wrong.
Kristen wrote that. It has been, that line has been used by several webinars that we've attended. However, it is nowhere found in the SBA guidelines or in any of the rules written here about following your tax receipts.
It mentions tax returns in the SBA definition about excluding certain items, but you're supposed to follow the receipts definition by SBA standards, but it's still pretty ambiguous term.
It's very ambiguous. I'm going to read you the definition. Yeah. Gross receipts includes all revenue, whether form received or accrued in accordance with the entity's accounting method from whatever source, sales of products, interest, services, dividends, rents, royalties, the amount of any forgiven PPP loan is not to be included in that. Here's the important line. All revenue received or accrued in accordance with the entity's accounting method. So the question comes up, I keep all of my books on the accrual basis of accounting, and then my accountant takes that accrual basis of accounting and turns it into cash basis for tax reporting. Which way do I use? What do I use? According to that statement there, you would use your accrual basis financial statements in order to see if you're a 25% reduction in any quarter. So you'd be using your accrual basis billing statements to determine if you're 25% under. Now, it's very easy to determine if your cash receipts are 25% below the prior year, but in some circumstances, your billings may be way down and you may be collecting money from prior periods in that quarter, which could disqualify you. So again, this is a little bit of a murky area, but we're going to err on the side of the client as opposed on the side of the SBA and the bank. And we're going to recommend that you do your gross receipts test two ways. If you keep your books on the accrual basis of accounting, do it on the accrual basis. Take your billings, your revenue from those quarters and compare them. If you do your books on the cash basis, then do it on the cash basis. Take your receipts from those quarters. Look at your bank statements. Compare what deposits went into the bank statements. Make sure that it's only income deposits that you're counting. No loan proceeds, no EIDL grants, none of that.
Well, just don't know about the medical people, but the provider relief funds, those may be included.
So if you're in a medical profession and you got the prepayment relief funds from the government, there has been no talk about whether that should be included in the in your gross receipts. There are statements that say any income provided by the CARES Act gets excluded, but it doesn't specifically say whether the medical profession is that. But again, err on your side. Don't err on the side of the government. You don't get what you don't ask for. So cash receipts is very important.
That next year when I ask for it.
Don't, right. You can ask for raises, but doesn't mean you're going to get it, but you'll never get it if you don't ask for it, except here. And a shout out for our special mugs. We know who did them. Thank you very much. We got, I feel like Kelly and Ryan, but not really.
We'll have to give you a close up. They're me and Bob, Brinker Simpson Care Season 2. So thank you to our clients.
So loans with principal amount of 150 or less, no documentation is required at the moment of application to substantiate the decrease in sales. And we'll go through the application, which we have here. So you don't have to provide documentation when you apply to show that you had a decline in sales. You simply have to attest to it. You will have to prove it when you go for forgiveness. Administrative safe harbor provides that a borrower an operation for all 4 quarters of 2019 can demonstrate a 25% on an annual basis by submitting 2020 and 2019 tax returns. I think it's mathematically impossible not to be down 1 quarter by 25% and be down the whole year at 25%. But what they're saying here is that if you have 2 tax returns that show you're down by 25%, nobody in our firm has any tax returns yet, then you would be able to qualify for this second loan. Remember, if you're under the 150, you don't have to show anything in order to get the second loan. Any forgiveness amount in the first draw loan that a borrower received in the calendar year is not included in gross receipts, which we said a few times. Documentation considerations, we can read through that. That's nothing new. You'll probably have to submit documentation to get everything done.
That's pretty, the one, if you use the same lender and you use 2019 calendar year the first time and you use that this time, you're not supposed to have to re-provide the same payroll material. So.
Right, so if they have your documentation and you're going back to the same bank, which we would highly recommend, unless that bank was really tough to work with, they should have all your documentation because the loan is really based on literally the same thing. All right, so this is for documentation that should be expected to be submitted. If you haven't put any of that in, this is what you're going to need going forward. So it's just a list, but you do coordinate that with your lenders.
This could change, but this is an actual list that a lender sent their previous PPP borrowers, telling them this is what they expect that they're going to ask for.
All right, the loan terms. If you're not forgiven, there is a payback. Remember, this loan is 100% guaranteed by SBA. There's no collateral on your part to post. There's no personal guarantees on this loan. The non-compounding, non-adjustable interest rate of 1% over a 5-year maturity. Similar borrower eligibility and certifications are required, and similar processing requirements for lenders administrating the second draw as they were in the first draw. Please make your lender your friend again, and be very transparent with them about what you're doing. Let's take a look at the applications quickly. This is the new application for the first PPP loan. And you'll see that the major changes down here were, you got to put your code in. And if you look at the list of forgivable expenses down there, they've expanded. Covered supplier costs. Back up.
Up here?
Yeah. On the front page.
Oh,
Covered supplier costs, you have more boxes to check. So that's really the only difference here. The attestation about having economic uncertainty stayed the same. We thought that was going to change, but it does say in your attestation, the second line, current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Again, a very vague definition. There was a lot of talk that they would make this more stringent going around, but you'll see in the new application, it is the same. The language is the same.
What's the second one? Or?
Now, look at the second. This is the new application for the second PPP loan. These are available through SBA, and I'm not sure if they're available in your bank yet, but you can go into SBA and get these. Again, it's all the same until you get down to the bottom there and you see the reduction in gross receipts part. So you have to name the quarter and the receipts. Okay. Except if you're a 150,000 or below, then you're just attesting that it happened. But if you're over 150, you have to put in the quarter and the gross receipts. So you do the comparison right on the screen or right on the application. That's what's going to go into your SBA. Again, there's a second page is a bunch of lines to check and initial that you are doing all the right things. And on the last page of the application, there's a section that if you're a minority business or you're in a certain class of business, that you're going to get looked at first in the process here. So make sure you don't miss that part. That's on the very last page of the application. That's all we want to cover right now. We'll go to the questions. If you have them, please put them in. We're going to read them and answer them.
And we do hope to cover the employee retention credit next week.
Oh yeah, we will have.
We're waiting on some guidance for that on how you're supposed to take the retroactive credit.
Yeah, these are new ones to come up. We're going to have guidance on that program. We're also going to get into the SBA loan and EIDL program, which are changing as well. So let's go into the questions. We had our PPP one forgiven. Can we apply for a second? Yes, if you qualified, certainly. If they won't run out of money, do we want to be last in line so the rules are more ironed out? That's a great question. I would go get your money now if you qualify, because I don't think the 25% is what's going to be the criteria for it. You're either in or out based on that 25% reduction. And if you hit the criteria now, I would go get the money now. My partnership received round one PPP loan, but due to usage limitations, we did not use all of the funds. We have yet to apply for forgiveness, but if we return the unused money, can we apply for round two of PPP? Yes. I am reluctant to pay back the unused money as we need the money, even if it's in the form of a loan, but would prefer to return it and then get a second loan if possible. But now, before you do anything, look at the new criteria for what expenses can be included in the forgiveness, because that supplies definition is very vague. Everybody has supplies in their business. All the supplies are critical. I'm reading that to think that if companies go and bulk up on inventory and make all of these huge purchases just to get forgiveness of the loan, that may not qualify, but there really is no definition there.
You still have to get your, you only get the 60% payroll still, but you might be able to get the 40.
Yes, but you do have to spend all of that money before you can get into loans round 2, so you can give it back.
Yeah.
Employee retention credit, we're going to cover at a different period, but Richard, please send us any questions you have and we'll answer those questions privately. Thank you, Bill. Good to have you. Does the new forgiveness application under 150 require any supporting documentation? No, you don't have to send supporting documentation, but we really recommend that you gather that information internally. So in case your question and you need to provide that information, you do have it and it does comply with the numbers that you put in, but you don't have to send it.
The under 50 streamlined, which kind of uses the same terminology, has one attestation that you've submitted to the lender, documents to prove that you spent the payroll on eligible expenses. So the lenders, if that still exists, if that attestation still exists, they're going to ask for something. So I would ask your lender what they have been using for the under 50s, and it would probably be a similar type of documentation, or they may eliminate that attestation entirely if the lender's lobby was able to get that removed. So,
is there a 100% limitation on payroll consideration for high earners? In the first round, there was 100,000. In the second round, there's also 100,000. So you can't exceed 100,000 for anybody who's paid over that amount. If the business was formed in January 2020 but didn't have payroll and revenue until May 2020, is it eligible for the reestablished PPP round?
I think you used, did they use the first one? I guess not, right?
They didn't. No, they were new in January. So as long as you're established before February 15th of 2020, then yes, you can use your 2020 payroll in order to get the loan, your 2020 payroll. So yes. And the urgency to apply for PPP2, similar to PPP, is the urgency. I would say that there should be an urgency, yes, because if you do qualify for that second round, you want to get your application in. Applications open Monday. The application is available. So I would suggest that you start working on that this week. You can wait, I think, up until March to get your applications in. But, you know, assuming they don't run out of money, that's the assumption. So we hate to assume. I don't know what would happen. I guess the government doesn't run out of money, just print more. So I actually increased the head count by 2 people during the 24-week period following my receipt of the first round. I now need to let someone go. Am I eligible to receive the second round of funding? I started out with 14 people. I now have 16. I'll be going down to 15. Yes, you're in good shape because you're going to meet your 14 head count with 15 people, so you don't have any problem on the forgiveness. Remember, the 3 criteria is that you got to spend 60% on payroll, you got to keep your head count the same, and you can't reduce payroll for 25% for any employee. Now, remember also that some criteria was changed in the middle of that loan that allowed for people who voluntarily left their employee or for people who were fired with cause to come out of both head counts. So if there's a situation where people left you or you had to get rid of people for cause, make sure you change the computation to help you out through that. But I think you're okay with that.
They're also asking if they're eligible for funding. Your head count should have no impact on whether you're eligible for round 2. It would only be the receipt requirement. So as long as you meet that 25% receipt decline, then you're eligible.
Yes, that's the criteria. So your sales have to be down by 25% in 1 quarter for you to apply. And that's going to knock out a lot of people, I'm assuming. It really is out there to help the restaurant industry. We'll use that as an example, who were forced to close. The assumption that you will apply for the same amount in the second loan as the first loan, that is the assumption because it is based on 2.5 months of payroll. However, if you're in one of the SIC codes that start with 72, then you get 3.5 months of payroll. So you can apply for 140% of your original loan if you're in that certain industry section. if you would have qualified under the first PPP but could have applied for more and have applied for forgiveness, is it too late to apply for the amount not previously applied for under round one? If you applied for forgiveness by December the 27th, you are too late. Yes. Gross receipts between quarter 19 versus 20, is that cash or accrual or however you file? All right, so you weren't listening, Sean, to my rant. So you keep your books on an accrual basis, you file on a cash basis. We believe that you could probably use either method to do it. If you keep your books on a cash basis and you file on a cash basis, you can only use the cash basis. But if you're on accrual and you file on cash, you may win. I'm confused about the 140%. Did you say we can apply? All right, I don't want to confuse people. If you're in a SIC code, standard industry code that starts with 72, you can apply for 3.5 times your average monthly payroll in your second loan. That's restricted for restaurants, hotels, entertainment venues that were hurt badly by that. So you got to look at your SIC code. And if you start with a 72, then you can apply for 3.5 months of payroll. If you do the math, 3.5 months of payroll is 140% of the first loan. That's where the 140% comes from. If you are not in that group and you do have a 25% reduction of payroll, you get the same loan that you got the first time.
You can use a 2020 base period though.
Yes, you can use a new period for payroll if it benefits you. If we did not receive the first round of PPP, do we still qualify for the second round? Yes. If you hit the 25% reduction in payroll, you don't qualify for the second round just because you didn't get the first round.
But you can just get a normal first round.
Right, you can go back in and apply for the first round.
And then there might not be any funding for round two.
Right. We got a Delco Strong grant of 10. Does that need to be included in gross receipts? I'm going to say no, but I don't know that specifically. But again, we'll find that out. If you could send us an email, Danielle, let us find that out for you.
I think accountants are split.
Yeah.
Pretty much.
Some people say
on
yes.
that, and we don't have a definite answer.
As a nonprofit, will the Forms 990 fulfill the requirement to show the required reduction in gross receipts? Yes, they are. There is some talk about providing tax returns as proof. So I would say that the 990 is going to be the proof that shows the reduction. However, if it's not a 25% reduction for the full year and it's only for 1 quarter, and let's say you're down 10% over the whole year and your 990 just shows 10% reduction, you're going to have to go back and show that quarter. Okay, I own inedible arrangements. Clearly, I am in the food business and, of course, pay restaurant license and get inspected by the health department. My IRS activity code is 45, so I don't know what a 45 is, but I would check that. You are a food delivery company, not necessarily in the restaurant business, but I do say you're on the fine line. But definitely check that. I don't know the answer to that, but if you email us, we'll try to find that out for you. That will have to be addressed.
Yeah,
that's going to have to be addressed.
I think there's going to be a lot of people that have the wrong code, and they're going to have to be able to fix that.
Because I have a peak, look, there was a second part to this question.
Oh. Right.
Because I have a peak holiday, Valentine's Day and Mother's Day, I bring in temporary help. They are paid with the check and are accounted for on my return as temporary wages. I do not bother issuing 1099s as they only work 2 or 3 days. You should be anonymous on this. Can I count those wages? The answer is no. You can only count wages that were paid through payroll.
Maybe it's a
great question.
Though.
As a religious not-for-profit, am I able to apply for round 2? Yes. Do you have a copy of the applications? Yes, they are on the screen, but you can also go to SBA and download them. We'll send these all out after the webinar is over. Are utilities included in PPP 2? Yes. Please define utilities: gas, electric, phones, cable, internet. Yes, to all of your questions. If you're a sole proprietor who received the first round and went on PUA unemployment, should you apply for round 2? Yes. Why not?
As long as you're going to reopen.
Yeah, you have to reopen. You got to spend the money on 60% on payroll. You have to do those things. If you're a sole proprietor, you're really just going to get, and you have no payroll, you're going to get $20,833 as the maximum amount. So you're going to get that loan. You just have to be in business. And you count workman's comp as an expense. No, the answer is no. It's not part of payroll. It's insurance. Expenses allowed for PPP1 brief overview. So those expenses were beyond payroll. You had rent, mortgage interest, utilities, transportation costs, which are only state fees for transportation. What else?
Covered. Oh, so
for the first one, it really doesn't matter.
Yeah, they're retroactive actually.
Yeah.
So you can use those expenses for your first loan.
Correct. So all of these new expenses that were put in with the change that just came out, they're retroactive to the first loan. So whatever the definition was of deductible expenses has changed going forward. Well, if you check in on our website.
Those are the added ones.
Okay. Yeah. So supplies, damage costs, IT expenses, operational expenses. There's a real broad definition of those expenses, but rent, utilities, interest on mortgages, transportation costs, they're all included still. Any reason to use 19 versus 20? I guess if it were higher, you want to use 19. If the payroll's higher, you could qualify for more money if your 20 payroll is higher than your 19 payroll. So whatever works for you it's open here for you to get a bigger loan if your 2020 payroll is higher. But again, if your 2020 payroll is higher, then you still have to be down by the 25% in sales. So you have too many people. You got to lay people off.
And if it's not higher, you should have less of a burden applying because they already have your documents. So it should be an easier process if you keep the same base period.
All right. You said you have to show that you used all the funds of the first loan. How do you do that? It's a great question because we've had some argument here. So you have to show, if you got a $500,000 first round loan, you have to show that you spent the money 60% on payroll at least and 40% on everything else. So it doesn't say you have to show that you spent those specific dollars on that payroll, but you have to have the expenses incurred in order to show that that money was used to cover those expenses.
Yeah.
So the question came up last time was, one of my clients got a $700,000 loan. His business broke even for the year. And at the end of the year, he had $700,000 extra in the bank account. Did he really spend the loan proceeds on those expenses, or did he spend his business proceeds, revenue proceeds on those expenses? There is no distinction to that. So in his circumstance, we recommended to him that, yes, you spent your loan proceeds on payroll. The other income that you receive is what's in the bank, not your loan proceeds. We hope that flies. We think it will. Is WIP included in gross receipts? If you book WIP as revenue in your on your financial statements, then I would say yes. It's not. It's how you record your revenue on your financial statements. If you have not applied for round 1 and you want to apply now, is the application for that available? Yes, that's one of the 2 applications that we showed. It was adjusted a little bit. You want to apply for round 1 and get that money and spend it, or make sure you did spend it already, because you can't get round 2 until you spend round 1. If the business returned to PPP loan proceeds, do they have to apply under PPP1 or PPP2? If you return the proceeds, you can apply under 1 to get them back, or you can just apply under 2 if you qualify.
Oh, they did already.
Yeah, they returned it. So original CARES, you got either PPP or employee credit. If you got PPP in round 1, what do you do about the employer retention credit in the first 2 quarters of 2021?
There is a provision that you can go back and do that under certain scenarios. There's also a receipts test there that has a different definition, or another test that you were shut down by the government. We plan to do another webinar or some type of information release on that. It's a little more complicated. I am concerned because there's some talk that the actual deadline is 1/31. So do look for more information, but there is the potential that that could be quite a sum for people to have some relief. But we just are waiting for details from the IRS.
Yeah, we'll get that set up in the next week though, in case of a deadline. For the second loan, can you review again what I do if one employee has quit since the end of PPP 1? And now the headcount for us went down. So if the employee quit, he would not be part of the.
I don't know, that's a good question.
Because if
actually.
they voluntarily left.
Yeah, I mean, if you use your 2019 payroll and you have people that left, there's nothing in here that says you cannot still use that. You would need to get the headcount up to the original.
Yeah, but I don't think that person is in the headcount if they voluntarily left the company.
Right.
They would be out of the headcount going in and they would be out of the headcount going out.
But the payroll value, I think.
Yeah, the payroll value, you'd still have to spend everything according to the plan. If you're borrowing more than the payroll that you have, again, you have 24 weeks to do it. I think you're fine. I don't think you have any issues there. You just apply and get the money.
Yeah.
That's a 3 raised hand with that.
I can't figure it out. I'll look. I know who they are. So whoever raised their hand, you may have to put a question in the chat. But if they were clients, so it's not anybody that wants to call.
What type of documentation for loans over 150? We have a slide in there, and you can just print that slide, Tracy, and it's listed in there what documentation will be needed.
We think. I mean, this is going to vary by lender. I think they've listed. They could be quarterly financials. It could be bank statements. And we don't know. What's that?
We're still 36 questions. Okay. All righty. So we'll try to get through these as quick as possible. We do have 40 questions still pending. For the first round, because of closures, it was easy to track the spending. Everyone was paid while not at work. For the second round, how do you recommend tracking how it's spent on payroll? As people are out for contract tracing, do we just track it as paid sick leave? I don't know the answer to that right now.
I can talk to you about that later. I mean, there's that whole other program with the FFCRA paid leave, and those wages are not included. I don't know if that's what you're asking or another question. So if you reach out to cares@brinkersimpson.com, and give us a little more information, we'll get that question.
Definitely email us, Heather, and we'll answer your question. Are construction materials included as supplies for construction management? I would think yes, as long as if you're using the supplies to generate revenue, then yes.
That was one of the last things that came out, clarification on these expenses, so we could be waiting a while for more.
We have an as-needed employee may work 1 to 7 days per month. How do we figure his payroll? That pay, whatever hours they work, if you're 30 hours or under, what was it? For full time?
I don't think it depends when you say figure his payroll, you shouldn't really have to worry about it. It's either you're going to use your 12 months in 2019, a trailing 12 month, or you're going to use 12 months 2020. The total payroll divided by 12 times 2.5. And you don't have to worry about that one employee. And when you go for forgiveness, it will be just what they were paid. I don't know what you mean about how you figure his payroll. I don't.
Right.
In what capacity?
You stated that using 100% of forgiveness for payroll, why would you not use 60% on payroll and 40% on expenses? Then you can use the remaining payroll for the ERC program. You're thinking very well about this ERC program. The reason is because you need to have an economic slowdown, and your income has to go down by certain percentages in order to qualify for ERC, and we do not qualify for that.
We were shut down for 1 day, so we might.
No, we don't qualify.
I think we might. Accounting firms are an actual case. Seriously. Right. But that is a good analysis that people need to do with the ERC for sure.
I believe I heard that PA will tax the forgiven PPP funds. Is that correct?
There's different bills.
It's not passed yet, Robin, but we understand that most states that follow the federal tax return will not tax it. Pennsylvania is one of those states that does not follow the federal return, and I'm sure they got their grubby little hands out trying to get their 3%. So we'll see.
Yeah.
But we don't know the answer yet. Can unemployment insurance count as an expense for round 1 of PPP? Yes.
Unemployment insurance?
If you're paying unemployment insurance for your employees, that is an includable cost.
For the covered expenses.
Yeah. for the expenses. Any reason to believe RMD forgiveness will be implemented again? I have no reason to believe that. How will extension of government paying existing SBA loans P&L work? There is no answer to that yet. The question is, if you had a SBA loan and the government was picking up your payments for 6 months, would that count as income for your tax return? We don't know the answer to that yet. It hasn't been determined. We're gonna say no, but again, there is no answer yet.
And I think he's asking logistically, it should just continue to happen with your lender.
However, he's got big payments, the SBA loan, and with the taxable income.
That is a good question, actually.
We don't know the answer yet, Chris. If I only took a small payroll amount weekly from the business, can I now up my payroll amount for myself to get the maximum? No, because the measurement for payroll is all in the past. It's either 2020 or 2019. So those are done.
If you're a sole proprietor, you can show a higher net income.
Yeah, you can't manipulate payroll. Would COVID protection required COVID supplies for your business be part of the now included materials and supplies? Yes, exactly.
Separate category that
it is. Forgivable expense. Do we have to be forgiven for round one before applying for round two? No, you have to spend all the money from round one before applying, but not forgiveness. Is there a forgiveness process for PPP 2 if the loan is below 150? It's likely that the forgiveness is going to be the same, but there is no definitive forgiveness process yet, although they state that the forgiveness and taxation will be the same. The lender wants us to provide all the documentations for loan forgiveness under 50. Yes, lenders can make their own rules.
Well, it's because you're attesting that you've given the lender something.
Yes.
So the SBA kind of screwed the lenders on that one.
Yeah, the SBA is not requiring it, but lenders can have their own requirements. Is the payroll limitation for owners required for PPP 2? Yes, still the same. 7A loan is being paid by the feds now, and the initial period ends in March. Will they now continue paying 3 more months through June? It looks like they will, but again, it hasn't been written yet.
And I think it is for 72 codes. I think it might not.
Okay, it might be if you have a 72 SIC code. It might be already written, but for other businesses, it's not agreed to yet. Is there a distinction between nonprofit grant revenue? We are definitely down 25%, but grant revenue comes in so unevenly from year to year. I wonder if there's any special rule for that. There is no special rule yet. We use an example of a realtor who might sell 10 houses in the first quarter and sell no houses in the second quarter, but last year he sold 10 houses in the second quarter. So he qualifies according to the rules. I think you would qualify the same way as far as timing of your receipts. I want to win. All right, you are a winner there, Sean. I know what you want to win. You want to win the accrual cash accounting method questions. What's the deadline to file for forgiveness on the first PPP? Is March.
10 months after the end of your covered period.
For file for forgiveness, I'm sorry, for forgiveness, 10 months after the end of your 24-week period. So if most of you got a loan in April and your 24 weeks comes up in October, you have until June or July to apply for forgiveness, but I wouldn't wait that long.
Yeah, your lenders are going to.
Right, they're getting tired of this. I have not yet filed for forgiveness. My loan is less than 50. Can I wait for forgiveness with the new form? Yes, you can wait or you can file. Either way.
Those under 50s are getting processed pretty quickly.
Yeah,
I don't see a reason to do that.
I'm a sole proprietor with an LLC. How does the receipt of state unemployment funds relate to forgiveness of my first loan? It does not relate to it. If you received unemployment, it's a separate, it's not part of your business income. That's separate. PPP 1 forgiveness, there was an exception for certain businesses. So staffing requirements, is that still the case? I don't know you know what we're talking about?
I don't know. If it's like a leased employee PEO type thing, I would imagine those rules still apply, but I would follow up with us. I'm not sure what that question is.
Send us an email, we'll answer it for you. To be clear, on unspent PPP 1, if it has not been spent even after the new options, does that need to be returned prior to applying for PPP 2? Or can you keep the unforgiven amount, have it flipped to a loan, and then apply for PPP 2? I don't know the answer to that, but I am guessing that you have to spend the entire amount because That is what the definition says. Now, it doesn't say you have to spend the entire amount on eligible expenses. Just got to spend it.
Yeah, but if you were fully closed and you have your $100,000 still sitting there and you spent no money, I can't imagine that you would qualify.
Yeah, so we have a client who has restaurants in airports, and they were closed for this entire period. He did get a significant PPP loan. The money is still sitting in a bank account. He will not be eligible for the second round as the rules are written today, because he never spent the first round. I own an to be clear. Nope, you already got that one.
And one thing with that, there may be an opportunity to basically give it back and then reestablish that first loan to restart the cover period, which that might make sense, but I don't know that to be true, but it seems like it would be fair.
All right, I own an entertainment venue that was forced to close, but I reported my SIC code is 92.
It's gonna be a question.
Trampoline park, is it possible to change the SIC code? That's a good question. I don't know don't know the answer to that, but I would look at them very carefully. And I don't know if she would have qualified for the Save Our Stages money.
I don't think so.
Yeah, you don't have any energy.
Not under the.
Yeah, I would talk to your accountant about that, and then maybe even call the SBA and see if the SBA can give you some guidance on that.
But they're going to have to address that because a lot of people, restaurants that may have the wrong code just because somebody made a mistake.
Right. There was a question on the new app that had a screen about the application being included in any bankruptcy. If the answer is yes, due to a different corp owned by the applicant having declared bankruptcy, how does it affect the application? There is no effect.
They did write some new rules about bankruptcy in the new act that I do not know well enough to speak to. So we could follow up with that if you send us an email and provide a more short answer.
We had one quarter that qualifies for the new loan. However, we have had a healthy bank account. Do you recommend that we apply for the new PPP loan? I talked to the client today of mine who qualifies, but business is very solid and he doesn't need the money and he is not applying. So that becomes a conscience question. And you have to read that attestation that you need the money in order to keep the business going. That's up to you.
After the past year,
you don't know what's going to happen going forward. Nobody knows. So I would think that if you qualify for the loan, you can take it. If you have a change of heart, then you can give it back or you can pay it back. Would a 1099 realtor who made less in 2020 qualify for round two? Yes.
As long as it's 25%, that's the money.
Right. As long as you're down by 25% and you spent round one. If you qualify, is there any reason not to also apply the PPP loan? Well, thank you. That's the same answer we just gave, but the only reason is that the business is solid and it doesn't need the money. However, there is the statement that says due to economic uncertainties, and you're in the medical field, and there are no certainties in the medical field about what's going to happen going forward. They could very easily shut down non-required surgeries. They could shut down elective surgeries like they did before. So you don't know going forward. I'm a business owner. If I were a business owner that qualified for the loan, I didn't write the qualification test, just like I don't write the tax rules. I just follow them. I would take the loan proceeds. If at some point I have a moral complex and I feel like I should give the money back, I can always give the money back. But I don't know what these uncertainties are going forward. Dr. Fauci said yesterday, the worst is yet to come. So if we haven't seen the worst, but we're going to see the worst, then there's economic uncertainty for every business, in my opinion. Our professional online information services like Daily Variety, breakdown services forgivable. I don't know. I don't think that they're part of the IT or the utility cost. I don't believe that they are. You can always try to put them in there and they can get knocked out if you need them, but I would certainly, like I always said, err on the side of the borrower, not on the side of the lender. I'm a solo law firm. I pay myself a salary 2.5 times less than 20K. Can I apply as a sole proprietor instead based on salary? You can apply if your law firm, I don't think you're going to, because your law firm is either going to be an S Corp or C Corp, and you're not going to have any other earned income. You can apply based on your earned income from your business. I think in your circumstance, you're going to be limited to your payroll, unless you're an LLC paying yourself payroll, which you shouldn't be doing in the first place.
The owner compensation is governed by the entity type, so I don't think that's something you can have any flexibility with.
If we use 2018 taxes for our calculation of PPP 1, is it okay to use 2018 taxes versus 2019?
I don't think so.
No, when you say you use,
Some people did. If you didn't have a 2019 return done early on, banks would let you give 2018.
okay, oh, for sole proprietors.
Yeah.
Yeah, I don't believe you're going to be able to use 2018 again. You have to use 2019 because they're filed.
I had to do it.
You have suggestions on banks we can use, apply. From your experience, some banks are better when it comes to PPP loans. Yes, please email us and we'll give you a recommendation. We don't want to do it here publicly because there's a lot of bankers on the line here. Good ones and bad ones, but mostly good ones.
There's a very clear difference between what people are able to do with certain banks, for sure.
Timing question, if you are basing the loan amount on 10 weeks of payroll, do you have 24 weeks to use again? Yes, your forgiveness period is based on 24 weeks. Anytime between 8 and 24 weeks. So if you hit the forgiveness at week 16, you can stop and cut off and do your forgiveness application then.
And keep in mind your $100,000, they made it clear in the act that this time is prorated. So if you're doing 10 weeks per week, prorated at 10 weeks, not the 45,163 for the 24.
Right. Can you reapply for PPP 1 and PPP 2 if you return money from PPP 1? Well, you can reapply for PPP 1 if you were entitled to those monies, yes. PPP 2 you can apply for if you spent all of PPP 1 and you had the 25% reduction in receipts for 1 quarter. Yes, you can apply.
And that they have money left.
California currently has an SBDC grant available that is forgiven. Would this grant impact my second round of PPP? I'm going to say no. They're exclusive right now. It seems like you're just going to do the PPP forgiveness based on the loan only, not any other grants that you receive. Does the government plan to broadcast all PPP loan recipients like they did with the first one? I don't know the purpose behind that. I would assume that if they do broadcast that, they're certainly broadcasting all of the companies that were hurt during the pandemic. So I would suspect certainly they will do that.
Just like any other technology, I would assume that they will.
I don't know the purpose behind it. So payroll total can't go up or down when applying for round 2. Is that to be the same as round 1? No, that's not correct. You can use payroll period of 2019 that you used for the first loan, or you can use 2020 if that would grant you a larger loan. For forgiveness for loan 1, company was closed due to government shutdown and did not pay all its employees after PPP or exhausted. For the forgiveness, I believe there is an exception for the FTE requirement situation, but there is an exception for a payroll reduction of more than 25% requirement.
No.
You are correct. There is a FTE relief if you were closed by the government, but not the reduction in salaries of 25% because you are arbitrarily reducing people's payroll at that point. So the answer is no.
But hopefully you have enough excess payroll costs that you should be able to cover any reductions. Most people have been able to.
Yeah, it's the forgiveness application. When you get to that 25% reduction, talk to your accountants very carefully about that, because if you have an excess forgiveness from payroll, then you can use that excess to offset any shortfall in the other areas. My business is 51% women-owned. Can we apply for PPP 2 now, or do we wait until the 18th? I believe you're going to have to show that you've got a minority business, women-owned business, WBE certification in order to qualify as a woman-owned business. But I don't know the answer to that. I would certainly apply as a woman-owned business, no question. You
have to just go to the CDFIs, and they all know that process.
Yeah.
It's governed by lender rather than the actual business. So if you go to those eligible institutions, they'll be able to tell you what they need.
Does ERC apply? We're not going to really talk about ERC today because it's very specific. If you were down by more than 50% in Q2 but had a slight increase for the year,
you would.
Yes, you qualify because it's a quarter by quarter.
You stop being eligible in the quarter, you're restored to 80%.
Right. So. Second round of PPP is still a 24-week period. Yes, up to 24 weeks for forgiveness. Is employee health insurance included in the pay, the entire amount? Yes, it's included in the computation. What is the period for application on PPP2? I believe it starts on Monday, next Monday, and it goes until March the 31st. So clarify, a question has come up a few times. To be eligible for round 2, you need to have spent all of round 1. Yes. But are you saying it doesn't need to have been spent on eligible expenses? Is that correct?
I don't think we do that.
I don't know the answer to that. It hasn't been asked. I would assume that you've spent it all. We'll have to look at that and find out. If you can email us after this, we'll definitely send you the answer to that. How will PPP forgiveness be treated for financial statement purposes? Will the forgiveness be put to equity and a footnote disclosure be required? Should we assume that forgiveness will appear as an M1, M2 adjustment? Yeah, I don't know the direct answer for that. There is some argument with the financial statement people and the audit people, but certainly it's going to come off your balance sheet. It's going to go into your equity somehow. I don't know if it's going to be shown on your income statement or not. It will definitely be an M1 or M2 adjustment, likely on your tax returns as well. It will have to be shown.
The AICPA did put out guidance for that over the summer. I don't know that it's final, but they put gap adjustments together for that.
Yeah, I've talked to a few auditors and they disagree with presentation, or they just argue about presentation. But
they're going to have to.
There'll be an answer. Yeah. So PPP2 cannot be applied for if you return PPP1. I didn't say that. What I said was PPP2 cannot be applied for if you did not spend all of round 1. So if you spent money and you returned money, you're fine. You spent what you kept. All right, we're getting in capital letters. When calculating the average monthly payroll, is it just the gross payroll of each employee, or do we add in matching Social Security? No, you don't include the Social Security. There are other add-ins. Health insurance, 401k matching, disability insurance, life insurance provided by the employers, unemployment comp, but Social Security tax is not included. Do we use the same management company loan calculation spreadsheet as applying for the second loan and just adjust it as needed? Yes, it's the same computation, but there are some add-ons in there. So just be aware that there are some add-ons. Look at the application for it. It's very specific in there. Which one? We have one more. Since PP. Oh, we have a couple more. So that, yeah, you trail long.
That's not true in real life.
She's got a big mouth. Since PPP can be counted, expenses can be counted in PPP, and the same expenses included as part of business tax return. Is it appropriate to say that nonprofits can count expenses to contribution grants and PPP and first PPP, part of second PPP, if still demonstrated revenue reduction in a specific quarter? Yes, do not account for PPP in your revenue reduction. You stated that you use 100% on payroll for forgiveness stuff. That's the ERC question. We already answered it. We already answered with.
What?
Is Republic Bank ready for apps yet? Yesterday it was not yet. No. It may be if you are a certified women-owned business. You.
I don't think they'll be.
They're not ready yet because I did speak to your banker this morning.
I heard the 20th from another similar bank on. I think Republic and Meridian. I think are opening the 20th.
20th. So check on the 20th. Make your banker your friend. Don't make him your enemy. I saw on the second round application there was a statement of necessity regarding able to get funds from other sources. Is this still required?
I'm not sure. I think it's still there.
It's still part of the attestation as far as we know. For PPP1 forgiveness, there was an exception for certain businesses staffing. That's the PEO. We already answered Rob's question. Go down to Drake again. For sole proprietor business owner LLC, a single owner LLC, and his income passed through personal tax return would be quarterly business loss or reduction still be required? Yes. You're paid in spurts. That's the realtor example. That the realtor doesn't earn his income evenly over the year. He could earn it 3 quarters and 1 quarter have 0. And if he meets the 25% reduction, then yes, qualifies. Sorry, we answered that one. Yes. The attestation regarding No other sources of funds. Funds from retirement accounts for second mortgages could be tapped, but this would be possibly negative for retirement. I would not use those funds for replace PPP. Go after the PPP money. It's being made available to everybody. Clarify the contribution question. Are we allowed to count the same expenses? Yes, payroll expenses have changed though, so make sure that you do change those expenses.
So I'm sorry, we would need to see what that other grant was. Some of the grants from the CARES Act are very clear that you cannot double dip. Like the provider relief funds, the EIDLs, you're not allowed to use the same expense. You have to be able to trace each grant. Some of them that are outside of the CARES Act, outside of COVID, I think that would probably be okay.
We have 4 questions up top. If you had spent all PP1,
yeah, you returned it.
Yeah, we already did that one. I was thinking of using a web-based lender versus the one I used for round 1. I read somewhere you're using the same 2019 numbers, that you really should use the original lender. I would agree that if the original lender has all your documentation, you don't have to supply it the second time around. I would use the original lender. Some of the lenders who were challenged, let's say in the first round, actually came up to speed as it got later, and they have to be ready for this round because they already did it once. Is Bank of America ready for applications? I don't know the answer to that. Just call your banker. They're not going to answer that question, especially. Instead of taking a paycheck in the original 24 weeks ended, should they start taking a paycheck again to apply? No, you're past the paycheck date. Your application is based on 2019 or 2020 payroll. Those years are done. So whatever the payroll is where you're going to get it. Should we use the same management company loan? Yes. That's it. We're done. Please email us at cares@brinkersimpson.com, or the website that we have gets updated every day, www.brinkersimpsoncares.com. Please go to that website. Any changes that occur are put in there immediately, so you can pull them down and read them, along with a lot of other information. Good luck to everybody. Please email us if you have questions that we didn't get to today, or if specific questions come up. We are engaged by some of the participants to help them with their forgiveness applications. So we are in the business of doing that. And if you need help with your second application, please reach out to us and we'll help you as much as we can.
And look for the invitation for the next webinar, which will cover the employee retention credit. It's a pretty important topic to cover. And if you have any questions or want us to cover certain topics, let us know. We'll consider that. Send
them along. Thanks again.
Thanks a lot.
Hope everybody's successful getting into the second round. Thank you.